Guys, every now and then it feels like the market gets the response wrong to an earnings report. For us, that might be what happened to Wheaton Precious Metals and their Q3 results. It seems the market just doesn't want to reward a strong report after over-exuberant analysts got the forecast wrong on top-line revenue. But then again, who knows? The company is, after all, up 40% year to date. So investors haven't exactly been hung out to dry, even if they didn't get a bump from the results. Anyways, enough of that, guys. We're talking earnings. We're talking Q3. We're talking Wheaton. Folks, it's Q3 earnings season. Let's dive in. Wheaton in the third quarter reported top-line revenue of $308 million, a 38% improvement on a year-over-year basis from the $223 million figure in revenue reported for Q3 2023. The figure also represents a 3% increase on a sequential basis from $299 million in the second quarter. Analysts, however, had called for top-line revenue of $325 million. The company also posted a second consecutive quarter of record cash flows, with operating cash flow improving to $254 million, a 9% increase sequentially and a 48% improvement year over year, up from $171 million. Net earnings for the quarter ended September 30th came in at $155 million, or 34 cents a share, a 33% improvement year on year and in line with consensus estimates, while adjusted net earnings came in at $153 million, or 33 cents a share, a 26% improvement. Earnings were also impacted by the global minimum tax, resulting in a $28 million tax expense associated with the measure. Wheaton ended the quarter with $694 million in cash versus a cash balance of $540 million as of the end of the second quarter. This notably is despite making upfront cash payments for $30 million during the quarter for mineral streams and royalties. Wheaton has no debt on their books, along with an undrawn $2 billion revolving credit facility. In other words, the company is building a war chest while still adding assets to their portfolio. Wheaton also issued a quarterly dividend of 15.5 cents per common share during Q3. Okay, so let's dig into the production data. Wheaton saw the production of 144,000 gold equivalent ounces in the third quarter, which was a 2.1% decline year over year from 147,000. The decline was also comparable on a sequential basis, with Q2 seeing production of 147,000 ounces. The production decline was blamed on the Salobo and Constancia streams, which were slightly offset by improvements at Penasquito. Production during the quarter amounted to 61% gold, 37% silver, 1% palladium, and 1% cobalt. The big story here, however, is cash costs, which came in at just $437 per gold equivalent ounce, compared to $445 an ounce a year ago. The average realized price per GEO, meanwhile, grew 26% year over year to $2,512. For those of you already trying to do the math quick in your head, Wheaton had a cash operating margin of $20.75 per ounce in the third quarter, a 34% jump year over year. Okay, so let's quickly look at the operations. Wheaton Precious Metals currently has a streaming and royalty agreement on 18 operating mines and 28 development projects. Subsequent to quarter end, they also added an arrangement with Montage Gold, which we did a video on, and amended an arrangement with Rio 2 for their Phoenix PMPA, which will see further attributable gold added to the arrangement. Well, at least 10 of their development assets have continued to progress towards production. The main story here is the Blackwater project, operated by Artemis Gold, which is 95% complete, with the first gold pour slated to occur at some point later this year. Other notable assets on the horizon include Ivanhoe's Platreef project, which is expected to see first ore in the second half of 2025, and B2 Gold's Goose project, with the first gold pour expected to occur in Q2 of 2025, with production to ramp up to commercial levels in the following quarter. And later next year, RS Mining's Marmato mine is expected to see their first gold pour before year end. In terms of official guidance, Wheaton is expecting 2024 production of 550 to 620,000 gold equivalent ounces. By 2028, that figure is expected to increase by over 40% to in excess of 800,000 GEOs, which doesn't include recent additions to the portfolio. What this guidance implies is that Wheaton is expecting Q4 production of at least 137,000 to hit their guidance midpoint. But that figure would represent a fourth straight quarter of production declines, so I guess we'll see. The top end of 2024 guidance, however, is in fact lower than the 2023 production figure of 620,000 ounces. Okay, so let's wrap it up. Wheaton was one of the countless names that reported on Thursday, with the day being by far the most popular day to release earnings this cycle, at least in terms of the mining sector. Perhaps this is why the name saw so little love among investors to close out the week. Or maybe it's because of the revenue miss despite record cash flows, or because of the price of gold being slightly down on the day after a bit of a rougher week than investors are used to lately. It could be any number of things. But what we do know is that Wheaton has one of the best asset bases out there when it comes to royalty and streaming names, and quite frankly, that average cost per ounce is tough to beat. It sure beats being the guy that actually goes through the effort of pulling the metal out of the ground. That's for sure. And if I'm you watching this video at home, the thing that I would have found the most fascinating about this company and these earnings is that the company saw that 34% increase in cash operating margin. That's what happens to a company like Wheaton in a rising gold environment. This company's basically proven from the beginning of their existence that they've always got some pretty smart bean counters behind them computer screens that are figuring out what assets to buy and what to pay for them. And quite frankly, I think that this is going to be one of the hottest names as we enter this gold bull market, because there's a lot of investors who don't want to take on the operational risk and they just kind of want to grab those streams. And I think that Wheaton is definitely going to be one of those names that if you are thinking about the bigger gold names and what names to invest in my opinion, it's one of my favorites. All right, everybody, thanks for watching. If you enjoyed this video, let us know what you think in the comment section. Also, if there's companies you want us to cover, let us know. I know somebody keeps messaging us about B2 Gold. We are going to cover that one, I promise. Thanks for watching, everybody.